Hello dear traders, welcome to another live webinar. My name is Angelo, your host, presenter and friend, back for another webinar today where we will be looking at another webinar on risk management. This one is the advanced level, so hopefully watching this you have already watched a previous one we have done about a week ago where it was the money management, more or less risk management for binary trading. So this one should be for more forex trading and for CFDs and more like stocks and commodities. There is a live chat going on as well for the live traders watching this. If you guys can hear me, please let me know. I've got an eye on the chat here looking to see if anybody is going to write, who's going to write first. Like always, let me know where you're watching from. Hopefully Alexander is watching from Ukraine, maybe Shaq from New Zealand if he's up still. Should be really late in New Zealand, like always 11 o'clock at night for them. So if Shaq is here, let me know. And of course my traders from, here we go, first one in. Okay, watching from Sri Lanka. Welcome there, sir. Jivan, that was the first message I see here. So people can hear me, that's great. And I'm not going to hold this one for too long. It should be a pretty nice and fast webinar today with regards to the risk management. This is the advanced level one, as I mentioned. Let me just put it on the screen there as well. There it is. So I'm more smaller down here. Watching from Kuwait. Welcome. Sri Lanka. That's 2-1 for Sri Lanka. India. Hello, Naveen. Welcome. Right, guys. Well, here come all the comments. There's Alexander. Welcome, buddy. Welcome once again. One of our, I don't think you missed any, Alexander. You've been here for all of them, and I really hope your trading is getting to a really good point right now. We've been through so many strategies, indicators, risk managements. So your trading, amongst others, should be at a high level now. Today, this one is going to help for forex trading, for long-term trades. If you want to build a nice portfolio with some balanced trades out, the stuff we're going to look at today is going to definitely help for that, especially in the times we're living in right now, where we're going from pandemics to world-shattering wars right now between Russia and Ukraine, which is crippling the economies for many countries, with oil prices going through the roof. Our dear friends here in Sri Lanka are feeling the aftermath of all of this as well with the recent political unrests. And there's lots more things coming always. There's talk about recession nowadays in the US. Their economy is off the hook with so high inflation that many people are worried that so high inflation could lead to a very negative fallback for them. And if that happens, then things could go pretty bad for many others. Anyway, so if you have questions, like always, write them in the chat. We have moderators here, as I see already. One of my moderators is writing up here with Javeen. Amazing to hear from Sri Lanka. Keep it up. There's my moderators doing a good job. So questions, send them to the guys. They will answer. I'll be answering some questions at the end as well for any questions you have. And I'll just start up right now with our presentation. And first slide, first money in. What is money management, otherwise known as risk management? Then this is simple answer. This is controlling, reducing and eliminating the risks involved in trading. This in a nutshell is what risk management and money management will help us do. Control our trading much better. So how we can do this? First one we're going to look at here is the first way, and this is before trading. So before you get started with your trading, you have the option of taking the take profit on your forex trade or any ETF. Stop loss is the second thing we can do. So take profit and stop loss, they more or less go together. And diversification. This is a subject we're going to be talking about, and I'll be showing a lot more about, and some ideas I have to show you guys on the live account as well, just to really drive that one in, how important we can use that to make some really good portfolios for our trading. Then the next thing you can do is the during the trading. So during trading, you can use a trading stop loss. You can use hedging, of course, and then closing off positions. This one is the easiest one, but for many people, it's the hardest one. And we will have to really explain the importance of it, because it is very important sometimes to take the intelligent decision and getting out of something that is losing. You don't want to just keep on digging your hole deeper and deeper. You want to actually get out of that hole. Okay, so let's get into more details now with the first one, the take profit and stop loss. Okay, TP, short for take profit, is a price limit entered by the trader to automatically close a position once the profit target is reached to lock in that profit. everything needed to be said is more or less said here. So this is our exit plan. If you have a position open, before you allow yourself to be greedy, or if you don't have the time to sit there monitoring your trade all the time, you can basically do your analytics, do your statistics, check the charts, see where the price you expect to reach, and after a certain amount of time, it will automatically close once it reaches the take profit you have set. Okay, I see lots of activity on the chat, which I love seeing, and if there are questions there, I'm hoping my moderators are keeping a keen eye there and answering questions. If it's not questions and your support, as I see lots of traders writing where they're watching from, I welcome all of you from Bangladesh, India, Qatar, more India again, Liberia. So guys, for traders from India, if you do speak Hindi, and I bet you do, there's a webinar next week on Thursday in Hindi. Then after that, the week after, I'm back again with another webinar in English. And after that, again Thursday. Every Thursday, we're going to have a webinar for you guys. And it's going to be English, then Hindi, English, then Hindi. So for Hindi speakers, that's great news. If you're not subscribed to our channel already, then definitely click the subscribe button, click the notification bell so you're notified that every week, every Thursday, every second Thursday, you have a Hindi webinar and then an English one. All right, Govinda, that's for you, as I see here. For my traders in Nigeria, like Mole here, well, English. You hopefully speak good English, and you can watch all my webinars that I'm bringing to you guys every second Thursday. And every now and then we'll be trying to put some more videos on our channel as well, more shorter stuff for indicators and strategies. So let us know. You have the chat, you have the comment section underneath as well. So please always let us know what you want to see next. If you want to see some more strategies, more indicators, more stuff for Forex, more stuff for binaries, always let us know so we can deliver to you guys what you guys want. Right, so stop loss. When the price limit is reached, the open position will close to prevent further losses. This is again our exit plan. It would be beautiful and lovely if all our trades went perfectly well and we win every single trade, but unfortunately that's not the real reality. Reality is that we are going to make mistakes. Some trades are not going to go in our favor. Might be just a shift in the direction of the markets, might be some unexpected announcements or forecasts that come in that throw our prediction off. It's always good to have a stop loss or an exit plan to get out of a trade before it gets way bad. It would be tragic if you have 10 lovely winning trades and then one losing trade just sabotages all your winning trades. So anytime you're doing a long trade, have the idea, put in your stop loss, put your take profit, and minimize the risks. Very important stuff, guys. Get familiar with take profit and stop loss. This is what it looks like. Once you have implemented it, you can see from this example I have for you guys here. This is on crude oil, WTI, and one-day charts. So we can see oil prices have risen way high recently. They have dropped. Then they climbed again after the continuation of the turbulence, with oil prices just going through the roof, over $120 a barrel, which is absolutely ludicrous. Since this screenshot was made, the price has dropped. Last week there was big news a few days ago with what was it, Iran, that announced that their nuclear power program is back online again. So that knocked the oil price down by around $6, and then a further $2-3 yesterday as well. So oil prices are dropping, which is good to see. So if this trade, for example, was still active, which it isn't, it was opened here at the price. It was a sell trade. I put the take profit at $36.99, so 369 pip was the target, and half of that was my stop loss. So my prediction was, for example, the market to keep on dropping and dropping to pass this line safely, and at that point my trade would cash out and I get my profit. If things went wrong and it went into the other direction, hey, there's Shaq. Hi, Shaq. Lovely of you to stay up at 11 plus now to watch this. I hope this is helpful and useful to you, Shaq. So yeah, if the market goes in the opposite direction, I have my exit plan at an X1 loss, which would have been a $20 loss, and half of my target for the profit, basically. So I'm aiming for a $30, $37 profit or a $19.84 loss. Either way, I have my exit plan and it's not going to devastate my account. Last thing I want to do is to go to bed one night and wake up the next day and find my trade in a devastating loss if the market was to climb all the way up to the previous high at $120 and I don't have a stop loss. That would put me in a very bad position, a position I'm not willing to accept that kind of a loss. Hence why the take profit stop loss would really help. Okay. Questions here. I see Najin asking how to use the trailing stop. Great question, Jean. If you're using the margin engine, which most of us are using, as I will show you on the live account, the trailing stop loss is not available yet on the margin engine. It's available on the old engine still, but not on the margin engine. We are going to hopefully have that one in the pipeline, and it should be coming your way very, very soon. And it's going to be as simple as the take profit stop loss that you have here, that you just implement it. Might be somewhere on the bottom, for example. You can put your trailing take profit, trailing stop loss. If your trade is in a gain, you're making some nice profits, but you don't feel ready to close it yet, simply you'll put your trailing stop loss in or your trailing take profit in, and it will be following your price. So if your price is dropping and the market is dropping with it, of course, you're making some good profits. The trailing take profit will be just hovering above it. For example, if the market comes to here, it will be just trailing above. So if there is to be, as long as it's dropping in your favor, you're making more and more profit. Once it starts returning back up and it breaks that target, that's when you will be cashing out. So hopefully it will be coming to you very, very soon. As I see here, my moderator has answered the question to you as well. Right, back to what we're showing here. Here's more or less what I explained already. The stop loss is set to protect the account from any larger than expected unacceptable losses. And the TP is put in to cash out when we do have met those profits that we're looking for. All right, there's the little explanation here of the trailing stop loss as well, also known as a trailing stop. It is a type of market order that sets the stop loss at a specific price below the asset market price rather than at a simple value. The TSL then trails behind the asset as it's moving along. And yeah, as I explained, once it hits the point, it will close your position in a gain. Hedging. Hedging is one I'm sure any of you guys who are familiar with Forex trading, you have heard this term. If you are new to Forex trading and you heard it but you don't know how to use it, well, this is a very, very easy one and a good one to use. It's an advanced risk management strategy that involves buying or selling an investment at the same time to predictably help reduce the risk involved in executing the position or lock in the realized profit. So let's say, for example, I bought a trade on Euro USD. The market is going in my favor. I'm making some really nice profits. Then all of a sudden, I see the market starts going against me. I might feel though that the market can climb even higher. So what I will do in this position, I would think, okay, the market is trending upwards. I'm making good profits with this trend. This might just be a temporary pullback. So instead of selling my position and getting out of it, I can keep it open. I can open another position on the same asset for the same value in the opposite direction. So this one will actually not cost anything of the margin on your account. So you can open this position without having to add any funds to the trade. So if you put, for example, $100 in a buy trade, you won't have to put anything more in the sell trade to lock in that profit. Once the pullback ends and the market starts heading back up again, you can close the second position, leaving your original first position to be continue running into a sole profit. So instead of losing money when the market was dropping against you, you're actually making money there. So you're making original profits on the original trade, you're making profits on the second trade. Once the second trade ends and you close it, you're back to making profits on the original one. So you're making profits on both up and downswing. Very, very nice technique to use and get familiar with. Hope I explained that well enough. And if you haven't, let me know so I might give it a little shot on the live. Because on the live I have other things to show you guys. All right, so this is the simplest one of all, closing off positions. It's everything in the title, right? So closing off position. Closing a position refers to cancelling out an existing order position in the market. If you find yourself stuck in an ever-losing position, you can consider closing off the order to reduce the risk on your account and start looking for a better investment opportunity. I think that explains it by itself, right? Many of us, any of you guys who have experience trading and you have traded, you definitely have found this with your Forex trading, that you open a position, you made a mistake. For example, let's say you traded today on Euro USD on a buy. Tomorrow there's an NFP, as factually there is. And NFP goes against you. It's positive for the US economy starts booming, the US dollar value gains, Euro USD starts dropping, and you think, oh, I made a mistake here. What do I do? What you should do is close the position. Get out of it nice and early, cut your losses, save your account balance so you can reinvest it into something else. The longer you prolong that and you question it, you could hedge it perhaps, but if it's a big thing like an NFP, it could keep on dropping. It could drop a big amount, and that big amount of drop in a short amount of time could really, really devastate your account. So sometimes just getting out, staying out is the best thing to do. Sell the trade off. If you had $100 in your account and you lost 20 on a big drop in a matter of 5-10 minutes, If you don't want to risk it, there might be a pullback, might not. If you don't want to risk it, just get out, save the $80 on your account, end the day there, come back the next week and start again with a better plan. Make another investment, put your thought into it, and come up with something good. Okay, diversification. Very nice word, very useful word to learn, and something very useful to learn with our trading guys. So how we do this one, it ensures that by not putting all our eggs into one basket, you will not be increasing unnecessary risk to your account and your balance, to your capital. Experienced investors usually even diversify with other assets classes that are not correlated. So there is two types of correlation, positive and negative correlation, plus and minus. And we'll take a very good look at that on the next couple of slides. And I'm going to show you on the live account as well something about that. Didn't quite get the hedging part. All right, and again, I'll try and show that on the live part as well if we have time for it, because I really want to show you guys more about diversification. The hedging part, we'll get a look at that as well, I think. So, okay, positively correlated, aka correlation coefficient plus. Take a look at these ones, guys. Oh, a little bit too fast. On the example here, I have Banco Santander, which is a Spanish bank, and Deutsche Bank, which is a German bank. Both are in the banking sector. They're in different countries though, so economies in different countries are very different. They're both in the EU, but the Spanish economy, the German economy are total different from one to each other. But look at the movement they have here. When the red one is dropping, Banco Santander drops, then it comes up, drops, goes up again. Same thing with Deutsche Bank. Might be slightly different values, but the movement is exactly the same. Drop, gain, drop, gain. So these two are correlated positively. Now, you can say this is a form of diversification. Not really. You're still investing in the same sector. Same goes for the one underneath here, right? Crude oil and Brent oil. Both oil product, one is filtered, one is unfiltered. They have exactly the same movement. Look at that. Dropping, gaining, exactly the same on this one as well. So with these ones, you're not fully diversifying. If you are planning, let's say, to do a trade on oil. Let's say you have $100 in your account and you wanted to invest in oil. If you stick all your money in Brent, you might catch a nice spike on this one. But maybe WTI, maybe Brent has an even larger spike. So by splitting it 50-50, you might gain a little bit extra by splitting it onto this one. But then you have the risk that is involved that if the market goes against you, if the price starts dropping, you're not making, you're losing, and you're losing on both. So that's not the best way to diversify. You're basically doing two trades instead of one, which is good, but you're not really shifting it enough. We'll see some better examples coming up. Here's one which is negative. Negative correlation or correlation coefficient negative. Same thing, same meaning. So if you hear the same term, something is a correlation coefficient negative, it is the same as negatively correlated. Just for you guys, if you read anything or you're studying up on this, it means the same thing. Here we have on this example the ultra short triple Q, and we have the S&P 500. S&P 500, the 500 biggest companies in the US. That's where you find your Amazons, Teslas, the top 10 companies, the top 500 companies in the US. So on the other one, it's the ultra slow. And if we're looking at the movements here, this one contradicts 100% the S&P 500. So if you're looking for something that is exactly the opposite, this is the one you look at. Look how in the last part here, for example, it's rising here, it's dropping there. Then there's a massive drop on the S&P. There's a massive gain on the short triple Q. Behind my face here, the S&P is gaining, this one is dropping, then gaining. The S&P 500 is doing the opposite. So these ones have an absolute negative correlation between them. This is a very nice way of balancing. This example here, you take one positive, you take one negative, and you put that in the basket with the rest of the plans you have to go about. You should always have a foundation where you're building your investment, where you're building your trading idea, and then you add things to protect that investment in case something goes against you. And as we all know in the markets, you can never fully predict what's going to happen. So it's always good to cover your angles, cover your rear end, basically. Cover yourself from any unexpected movements. This shows that we're going to go to the live account now. Wrong way, that way. All right, so let me show you some things here that first thing first, I'm going to show you how to use the take profit and stop loss, how to implement this on the account. And I'm going to use on the example for this, the Euro USD on Forex with 1 hour candles. I drew for you guys a bit of a channel here from where the markets have been moving recently. You can see a very nice upward channel where the euro has been gaining in the last couple of days. This is from the 29th of August until present. Today's candle, the last hour, actually broke out of this channel, but it has a little bit broke out here as well, so this could be temporary. There are big announcements in the pipeline. There is a massive announcement tomorrow with the NFP, the unemployment benefits tomorrow as well, average hourly earnings, and this is from the US, so this should be pretty massive. So if, for example, now I'm expecting this announcement tomorrow to be positive, bearing in mind what time of the year it is as well, it is September's NFP. The NFP announcement itself, though, is for August. August is a big harvesting month in the US. So America is huge. They have their crops, their fields, lots of harvesting going on. So that means that there might be lots of positions that many people might be hired in positions of agriculture. Bearing in mind, these positions are not counted in the count, right? It's not measured in the unemployment change because that's outside of the farming industry. So the unemployment in America is currently very low. 3.5% is extremely low, but I might be even expecting to see it drop even further down, and that could put a very big spanner in it. The average hourly earnings is expected to be lower. The unemployment payrolls should be much less than before, so that's a negative if that's dropping and the average earnings stays the same. But let's say, for example, for whatever reason, I believe tomorrow that the USD is going to have a good day with the announcements. Euro should have a bad day with those announcements. So I'll just put the rest of my lines in here that I have prepared for you. With this in mind, if it is to be tomorrow a good day for the US dollar, that means that the Euro USD should be dropping. So if I was to open a position right now, I would open, for example, let's say 1 lot. This is something I was planning anyway, guys. So let's say this is my previous high. I would aim that and say, what is that price there? One for one, more or less, 100. So I can enter my stop loss at I can enter the amount here. You know what? My favorite, you can enter it here. You can pre-enter in this point here how many pips you're willing to sacrifice on the stop loss and how much prop or how much money in value you're looking at. I always prefer doing it the other way. You can do this. It's fine to do this. My way of doing it is I'm going to go for a sell trade on this one. Let me just confirm and open a position here. So I got 1 lot now in a sell position. I can take my stop loss, drag it up to the point I want, put my stop loss up there, take my take profit and drag it down to where I want this to be. Now, it's always good to have a ratio of 2 to 1. That stop loss up there would be a very steep one. This trade I'm opening is not for 1 day, it's more like a 3, 4, 5 day trade I'm looking at here. So I'm going to leave it up there, meaning that that is my exit plan. I might even drop it to here where is the previous support line I can see. So I can even drag this line, my support, to a previous like there, leaving my stop loss just above it, so I can just move that. That's actually fine there. And then that's 324 my risk I'm taking. My TP, I can pull this one down. Another way is just to come here and you can add it in here as well. You just take the price you want to make the take profit at. So my take profit is at the 0.99. I can just enter it into here as well. So 0.99, I can add more pips or remove more pips to give me more or less profit. So I'm looking at 300 on the losing side. I want 500 on the gaining side. Once I have my amount, click the enter button. There it is. It's locked in. There's my take profit now. There's my stop loss now. So that's it. Easy and simple. Okay. For one entry, 2,000. Well, there is a limit always on the investment amount. When you click here for the quantity you want, it should show you how much is available. And in this case, there is no limit here. The margin requirements are 500 to 1. So for 1 lot, which is normally 100,000, I have, it's going to cost me $200 on margin. It's not even a cost. This is the money I have to have on my account to open this position. If you have a huge account and you are looking to make huge investments, then you should be a VIP. You should have an account manager, and if that's the case, just speak with your account manager, and I'm sure they'll be able to make arrangements to add more liquidity, more availability for more bigger trades for you if you want to do bigger trades. That's answering a question here for Kumaran. Right, so next thing, that's that with the stop loss and take profit. Pretty simple, easy stuff. You can always move it around as you want freely from moving it up and down. So I can drag it to the top there, and my stop loss, I can move it higher or lower depending on where I want it. For me, this trade here is perfect. If it is going to drop, it's going to take a bit of a massive drop to go all the way down there. Realistically, if it is a good day for the US, it might stop at this point and then start rebounding. But over the next few days, if more good news come from the US side, it might drop and hopefully hit this previous low, which is a super, super low. But that's my idea behind it. That's my explanation of it. Hopefully, it's a good one. Now, next thing we're looking at. Now I want to show you how to use the multi-chart and how to make a nice diversification. So what is missing here? Walmart. Where is my Walmart? Open this and put Walmart here. Now this is a nicely balanced portfolio, guys. My primary idea here is a trade on Apple and for Amazon. These are my two big boys. I'm looking at the charts. I'm thinking that Amazon has been doing really well. Nice recovery they had recently and it's climbing. It's a big tech. Apple the same. They had a very nice recovery. New products from Apple should be coming out very soon in September. They always have their keynotes and their new devices coming out. So there's always excitement around Apple in September. So my primary one is Apple and Amazon. Tesla as well. This one is a bit of a tricky one because it is, yes, S&P 500 tech company, electric cars, but it also goes kind of against what we're seeing nowadays with super high oil prices and gas prices. I mean, it costs me like $100 now to fill my truck with gas, where about a year ago it was around half that amount. So I'm not really happy having to pay $100 a week to fill my car, where the obvious solution is buy a Tesla. I don't have to worry ever again about putting gas in my car when it's electric. I just stick it into the plug, charge my car, and off I go, saving $100 a week from gas. Now, oil prices are dropping, thank God, as I mentioned, but Tesla is growing. In my opinion, Tesla is the future. Electric cars is what we're going to be seeing, I think, in the next 30, 40 years. I am sad to say that I believe that gasoline cars like my one will be obsolete. So Tesla is going to grow, in my opinion. Just my opinion here. So I want to balance things out though. I don't want to stick my money in these three tech companies. I want to protect myself in case something goes against me. And that what I mean about going against me, what if the market starts dropping? What if there's a crash, the stock companies start losing? I don't want my three investments to start failing. There's a safe way out. We did do a webinar recently about safe haven assets. That was the last one we done. And we mentioned that oil is a very good, it's a safe haven asset. When the markets are dropping, oil prices, it's controlled the flow. They can increase or reduce the amount they're putting out. So oil prices could gain significantly as a safe haven commodity. Oil will more or less counter the markets. Then basic needs. If you have a very tough decision to make, if you are in a rough patch, you might be worried about your job, you might be worried about the future outlook, the economies are looking bad. So the one thing that you will definitely always need is food. You have to feed yourself, you have to feed your family, so that always is priority number one. Walmart is a very good one. They are selling food. So if all other things are failing, if Tesla, if Amazon, if Apple is dropping value, most likely Walmart will be keeping steady, maybe even making money because people will still have to eat. So this investment here, the piece of money I'm going to put in Walmart is a bit of a safety net. The same goes for Pfizer. We saw with, this is in the pharmaceuticals, healthcare. Super, super, super important. If not everything else, if you're not feeling well, health comes first. So the first and most important thing always is to take care of yourself and your family. If you have a toss-up between I need to buy some medication for my family, for my daughter, for my son, my wife, or to go and spend my money on a new iPhone, priority, of course, is not going to be the iPhone. It's going to be the medication for the family. So this is what I'm talking about. In times of difficulty, priorities are measured, and getting the medication you need is priority number one. So if everything else is failing, the Pfizer stock should be a good one. You could look at banking sector as well. I could incorporate into this some banking as well. But on this one, I just wanted to balance things out nicely. So if these three are gaining, that's great. Very likely the others will be keeping steady. If this one is losing, fine. The other three will be giving me the profit. If things start to go in the opposite direction, this one will be more or less neutral, maybe gaining a little. This one will be most likely gaining, and Pfizer will be most likely gaining. So again, I have a nicely balanced portfolio where I'm not putting all my eggs into one basket, and if I drop that basket, I just cracked all my eggs. So no, I'm splitting them into many baskets, and if I drop one basket, I still got 5 other baskets that the eggs are very nice and safe and healthy. What was the one we wanted to look at? Wanted to take a look at the hedging, right? All right, so hedging. Let me just get rid of all of these I have open here, the lines. So I have these two positions, one position here with a stop loss. Now, this was a sell trade. If, let's say, this trade is in my favor and it's came down to here, I made a very nice profit already. What I can do, this one has taken a requirement of 200 from my margin. So I had to have $200 plus in my account to open this position. I have it. So when I want to hedge things, if it's gone in my favor now and now the market started turning, let's say it's dropped down to this point, I'm making some nice profit down to here and it starts going against me. I don't want to close it yet. I have my take profit way down there. So it went halfway, it starts climbing up a little, and that climb up, I'm losing on my trade. So to protect myself here, once it's climbing, I'll open a second trade on the buy side. So look at my margin here, right? 200, look at my balance. It's 1986.84. So once I buy this trade, it just took the 15 for the opening of the position, right? The margin is the same for the buy and for the sell. So there is no additional requirement. I didn't lose anything by taking the second trade. One is making a profit, one is making a loss, but they balance each other out. If my trade was way down here and I had made like $300 profit, that profit is locked in. So once it starts climbing, I might be losing $40 on, or $50, let's say, on my initial trade. So I made 300, now it's down to 250 on that one. The other trade though balances it. So the other trade will be making $50. So I'm losing 50, I'm winning 50, it balances out. So the 300 original profit I made, it's mine. So once the market ends that little pullback, it comes down to there, does the pullback. Now I see it going down again. I close my second position, the pullback one, the buy I just did. I close that one out. I cash it out. I got my $50, $60, and that's it. Straight away, I continue my original trade. It hopefully keeps on dropping, comes to my take profit, and I got a lovely winning trade. All right, so this one, the second trade I did, the buy trade, I didn't put take profit and stop losses in. I could just do it from here, right? So I can add in here. But I'm not really planning to keep that one. So where was it? It's this one here. I close this trade. This is the buy one. So close, confirm. It's gone. I lost $6. I'm going to get it back, I'm sure, on the other one. So it's fine. But that's it. That's how you hedge your position. The same you can do on anything. Once you have a winning position, it's in the money. You just simply go, hedge it, and the profits you're making are yours in your pocket there. You can cash it out if you want, let it go to your take profit, but it just protects you. It gives you a very nice level of protection. Trading in 50-minute chart. What should I learn while trading? I'm new in IQ. Well, Peter, welcome. Good question. We are going to be going to the Q&A part very soon. So if you're doing 50-minute charts, then realistically, Peter, you should be looking at short trades. Short, a couple of hours maybe 3-4 hour at most trading. So the lower the charts, the more noise. When I'm looking at 1 hour charts like this means I'm looking for a trade that will be for, I would say 2, 3, maybe 4 days. If I want to get a better picture, I'll put it even higher. If I'm looking for a 1 week trade, I will open it on 1 day candles. But if I'm looking to do a trade that I'm opening now at lunchtime, for example, and I want to close it before the market ends tonight, then I'm going to look at 15 minutes or 30-minute candles. This will be a bit more noisy. You'll see a bit more pattern movements. For example here, if I was to be looking at this, I would say, okay, let me draw some new lines in here. This more or less looks nice. Looks like my mouse stuck a bit. There's the low point there. I can duplicate that now, extend it up, make a little channel of where the markets have been bouncing. This will be a channel. If I want to change things up and I want to go for a horizontal to make some zones, some grids of where I think the market is reaching, I can go horizontally, find a nice support level. Okay, stick this in there, for example, on here. I have a position open, so my support is right on that, right? The stop loss I have is on this support moment I see here, and it's balancing nicely with that previous one there. Duplicate that, drag it down. The lowest point the market has been recently is here. More accurately, the lowest low is there. That looks very nice on the rounded number as well, just above the drop there. So this would be the channel I'm looking at. It touched it recently here. It touched it last time. When was this? 1:45 my time yesterday. So in recent times, that's the low, that's the recent high, and this is the channel I'm looking at. So if I was looking at ending my trades prematurely, I would always say, okay, let me just take my take profit from there, and I can drag it higher up and bring it to the line I have here. So click and drag to there, or just move it around. It can come down. What is that price? 99.83. So I can put my take profit on 99.83, just bring it up and move it accordingly, and it will jump up to that point. Wow, look at that, over 1,000. I'm happy with that. I'll take that right now. So right, easy and good. I'm gonna switch over now to the full cam. If there are any questions, guys, we can answer them. There should be one more slide writing thank you very much in time for Q&A, and then I can just go here and show my full face on the camera. As I say always, guys, if you like this, if you found this useful, thumbs up on the video, please. It really helps us make more videos. Subscribe to our channel, click the notification bell to be notified for the webinars. As I mentioned earlier, every Thursday we're going to have webinars now. It's the first of the month today, so happy month to everyone. We're having an English one today. Next Thursday, it's going to be Hindi. After that, it's going to be English again. And after that, it's going to be Hindi again. If you speak other languages like Thai or Indonesian, we have webinars on Tuesdays for these ones, and also Arabic. If there's Arabic speakers watching this, we have Arabic webinars as well, and they will be on Tuesdays also. Currently, I think we're going to be having one Arabic, and this month we have 2 Thai, 1 Indonesian, 1 Arabic. Next month, depending on the audience, we might change things up a bit and give different things. But we need your feedback, right? We need your feedback for what you guys want to see. If you want to see strategies, indicators, money managements, I myself and my team, we do watch the comment section underneath the videos, so that's the best place. You can tell your account managers as well, if you are VIPs, what you guys want. There's lots of videos on our channel already, so you can watch lots of strategies and stuff from there. If you do have questions, guys, now's the time for it. I've got a couple more minutes. We can answer some questions there for you. If not, we can have to just move it to the next one. We are hopefully going to have a giveaway on the next webinar, so there will be some prizes to give out, some tournament entrances, some strategies and so on. Is Forex better than digital or binary in terms of non-blowing the accounts? Naveen, lovely question. I wouldn't say it's better or worse. If you can control your emotions and your discipline, no matter what type of trading you're doing, the results can be great, right? So if you have a good money management, if you like trading binary and digital, definitely, please, if you haven't already, watch the previous video. It's on our channel, the risk management for binary options. There's 3 very nice approaches. The martingale, which is the most aggressive, reinvestment of profit, which is the middle step one, and then the standard money management with percentage, which is my personal favorite. And if you can master that, then it reduces significantly the risk of binary and digital. Most traders who have tried binary and digital, if you have suffered losses, you will agree with me when I say that it is because of emotions. You have a bad day, you let your emotions go, and bad can turn into disaster once you let your emotions go. You start losing. Next thing you do a big trade. You have, let's say, you started your day with $100 or 1,000, let's say. You lost half, you panic, you freak out. If you were doing aggressive $100 trades, you suddenly find yourself doing $200 trades, then you lose another one of those, and you say, you know what, I got 300 left, I'm going to throw it all in on the next trade. Terrible idea. The fact that you got yourself in this position was a mistake from the beginning. Set your targets nice and early. Aim for a nice profit. Aim for 20%. If you have the time to do it, 20% is a nice profit to make. Do small trades, 2-3% of your balance. If you have 1,000 on your account, $30 should be the biggest trade you do if it's binary or digital. Make the profit, reinvest the profit, or just recalculate your investment again. You grew your account by $30, you're now up to 1,030. The next trade will be a bit bigger, will be $33. The next one, $35. And you just slowly increase in gain. So Naveen, to answer in short, I can't say what is better. you can equally be aggressive and lose big time on Forex if you don't know what you're doing. I had a story I heard when I was first starting in this industry about a trader who invested $100 into an account, started trading on Forex, opened a position. Now there is, of course, the spreads in Forex. So you open a position automatically with a bit of a loss. That is the spread that every company has to have, a spread. So she opens a position of $20 and automatically she put a stop loss at $20. So the spread was $20. So her position would open and close straight away. Reinvest another 20 with a stop loss of 20. Straight away, 2 seconds later, the trade closes. So in a matter of 5 minutes, she lost $100 without even trading. It was just blown on the spreads. This is something that rookies can face. So it's equally easy to lose everything on Forex if you don't know what you're doing. That's why I say for rookies, for beginners, if you haven't started trading yet and you don't have a trading account, of course, there is a link underneath our video in the description here where you can create an account absolutely free, very, very easy. Make your account with IQOption. You start with a demo account, which is absolutely free. Practice, different strategies that we have on our platform, on our channel here as well. Learn from others. Practice on your demo account. Once you see that the results are paying off, and you are treating that demo as if you're treating real money. This is important. Don't be playing around. Don't be messing around. Treat it as if it's real. And if you see that you're making good profits on a steady time frame, then to your discretion, add funds to your account, begin your trading with the dedication and calmness, and hopefully you'll get off to a very nice start with your trading. Traders who are existing already, who are trading with us or have an account with us, again, guys, control your emotions. If there's one thing you're going to listen from me and believe and don't forget is that learn to control your emotions, learn to let go. If you have a bad day and you have a small loss, get out. Have your small loss, end that session, get out, come back tomorrow, get it back tomorrow on a good session. If you have another bad session, again, get out. Don't get emotional, don't get upset. It's a part of trading. If you ever meet a trader who says, I have never had a bad day, I've only won money, then that person is a liar. It doesn't exist. An honest trader will definitely tell you, I had good days, I had bad days, but my good days outweighed my bad days, hence why I'm a successful trader. That's the one lesson that you guys, I hope you get from me. What are the key factors that control Forex price action? Good question again, Najin's got some good questions. So the answer to this one, what controls is the markets. We control the markets in a way, as in traders, right? The central banks control, emotions control. If, for example, let's say I am a multi-billionaire and I want to go buy a brand new house tomorrow in Paris and it costs me $40 million for that house. If my money is in dollars and I want to buy that house in Paris, I need to shift $40 million into euro. So I just made a currency exchange for $40 million. That's not a hugely significant amount on the markets. 40 million on the markets is nothing. But if you put that into the pot with all the other money that's being washed around every day through business, through transactions, that's how the money gets moved. Learn the market sessions. Always early in the morning opens the Tokyo market, Australian market, New Zealand market. Just because of their position on the globe, their markets open first. Now, what does an open market mean? It means that people are going to work, banks are open, loans are being given out, money's being moving from one account to the other, from hand to hand, so business is up and running. At the same time, over in America, it's late at night, businesses are closed, banks are closed, only ATMs, and maybe a couple of discos and bars. I'm sure New York and Las Vegas are open, but on the general, businesses are closed. So the US market will be closed, quiet. Asian market is up and running, money is shifting around. In Asia, of course, we're talking more about yens, we're talking more about currencies involved in the Asian markets. So that's the time when this market will be moving. If the Central Bank of Japan announces a very, very negative news that is displayed, it is going to be in the morning time for us in Europe, or very, very late at night for the Americans. And by the time the Americans wake up, they are informed about the news, and they already see that the Asian businesses have already dropped a lot of yen and they shifted over to other currency. So that's how the markets move, by just everyday business, everyday announcements by central banks, by governments, and of course by money changing hand from one hand to the other. Control emotions is difficult too. Abel, I totally agree. It is very, very difficult to control your emotions, but it is the one lesson that we all have to do. When we were children, every one of us had a different dream, right? Some wanted to be football players, others wanted to be rugby players or cricket players, astronauts. Not all of us got our dream, right? Some people had the opportunity, some had the talent, let it go, for whatever reason. But when trading, this is something that is in our hands. If you have good discipline and if you have good control, then if you're gifted with it and you have it, great. If you don't have it, try to work on it. There are techniques that can definitely help you control your emotions better. Having a solid plan will definitely help with that, but give it a shot. And of course, like always, in everything in life, if I like watching rugby, but I don't have the physique to play rugby, if I try playing rugby once and I get knocked out, I'm most likely not trying again. I prefer to sit on the TV and watch rugby from the sofa and let Shaq in New Zealand play rugby because these guys are phenomenal at rugby. So that's a lesson I have to learn. It was not for me. Same goes for trading. Some people, it might be unfortunate to hear, but it is the truth. Always control your emotions. If you see that you can't, you might have to make that hard decision that I'm going to try one more time to control my emotions, to trade again. If it doesn't work, you might have to be ready to say, okay, you know what? That's it. I'm too young, I'm too aggressive, I'm too naive, I can't control my emotions, I'm going to end it. That's a decision I made when I was in my 20s. When I first tried, I was terrible at trading. I was like a aggressive rage machine, losing left, right, and center, not able to control my emotions. Then when I shifted over, I stopped trading for a good 5, 6, 7 years. Tried again in my early 30s. Again, mixed results. In the last couple of years, now I'm coming close to 40, hence my lovely gray beard. But in my later years now, I do find I'm a lot more patient and I can control my emotions better. So that might be something that you guys might face as well. If you're young and a bit aggressive and you may be having a bit too uncontrolled emotions, cool it down, take some time off, recoup, control your emotions better, educate yourselves better, and whenever you're ready emotionally and mentally, get back again with the right time. When you're financially ready to invest, restart again. Right, guys. So that covers everything. I'm going to say it one more time because I want loads of guys to like this video, subscribe. If I said anything at all that you agreed with or you think was positive and you learned from, click the like on this video. It really helps us to make more videos for you. Subscribe to the channel so we get what you guys want and you get notified for the next video. Totally free. No one loses anything or pays anything to subscribe, and we thank you from the bottom of our hearts for that. So, okay, guys, see you on the next one. Thank you guys so much, and looking forward to be back in 2 weeks, and 2 weeks Thursday to see you. And again, Hindi traders, next week we're having Urvil will be here for the Hindi webinar, and I hope you enjoy the webinar with Urvil. Have a lovely day, have a lovely evening for people in deep Asia right now, and see you again very soon, guys. Bye.